Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today's hump day is June 15th, and we got some big news going on today. So let's take a look, see what the economic news releases hold. We got the CPI report came in, a slight uptick, so that's kind of preventing, as you'll see upcoming here on the bond market, it's kind of slowing things down for them. Well, it was a slight uptick. They're expecting about 0.2%, and it jumped up to 0.3, and that's the core. The headline actually only went up 0.2%, so the core actually went up higher than what the headline number was. So something to be watch out for that could tick back down, especially yesterday after we watched the PPI report. Maybe there might be some cuts in the CPI come lower, so that might be something we might want to watch the next couple of months here. Empire State Index, bad numbers, actually in the red, so negative 7.8. So that's manufacturing in the New York region. Again, we're starting to see some negative numbers on the manufacturing side, so it's kind of trickling down in those arenas. Industrial production, not so good either. 0.1%. Capacity utilization, same as last month, 76.7. Home builders index is still low as well. And so not great news. So the stock market is down. But and we'll take a look here at the bond market. But and then headline news, we got people protesting in Greece about the austerity measures that are taking place over there. As we mentioned, the Dow and all the stock markets doing pretty well yesterday because they kind of liked what they saw on the retail side, even though PPI, even though those numbers weren't great. So I think they're kind of finding its way as a correction today. So. Let's go ahead and take a look here at the bond market and see where interest rates are moving. All right, so here's the bond market. We saw we had a pretty big drop yesterday, and we had an opening. We don't have a gap because we did open higher than where we left off yesterday. We are hitting now the ceiling of resistance here, and having a little bit of rally. This would be probably blowing right through there and closing this gap up if it wasn't for the uptick in the as we mentioned, the uptick in the CPI report today, as we know that bonds are not, inflation is not bond friendly, because what happens is that bonds over an extended period of time, inflation erodes the value of those bonds over the course of time, so it kind of devalues it. So bonds aren't, a fund obviously of inflation. So otherwise, we could probably be seeing this tick up. This could be potentially close later today, but I'm not sure it's going to kind of hold back. It could be hold back later this week, or could be holding back a little bit, go sideways for a little bit, and work its way back up. So, all right. So rates are probably slightly better depending on yesterday if they did a pricing for the worse. If not, and then it could be a little bit worse than what it would have been at the end of the day yesterday. So, all right, folks. You guys have a great day. And folks, I'm also a loan officer. If you're looking for a mortgage in the state of California, I can also help assist you. You can check out my other websites here at obviously at Mike's Daily Market Report and MikeBjork.com, even CaliforniaMortgageTips.com and the Mike's Homebuyer University.com. I have some great resources there. But feel free to give me a call at 310-694-3544. I can do refinances, and I also do purchases, so I can help you get pre-approved to buy that next home here. So thank you, and keep me in mind.